The big four UK retail banks are scared, or they should be. Yes, HSBC, Barclays, Lloyds, and the Royal Bank of Scotland have 80% of the market for personal and business accounts, and less than 3% of current accounts are moved each year. But challenger banks, such as Virgin Money, Metro Bank, TSB, and Adam Bank, aim to change this. And the challengers have a real advantage. They have no legacy operating systems or legacy legal problems, and that should mean lower costs. And when you trade a commodity, in this case money, costs are everything. UK banks have paid £53 billion in fines since 2000 for selling dodgy payment protection insurance and engaging in other forms of bad behavior, and the fines just keep on coming. Not for the challengers, though. And there's more. Marketplace lenders such as Zopa and Funding Circle and RateSetter are connecting borrowers and lenders directly. Disintermediation means higher returns for the lenders. And a bank without a balance sheet has the very same logic as a taxi company without taxis, or a hotel without real estate, or a media company with no content. So are the banks doomed? Not yet. The cost advantage of the challengers has yet to show its teeth. The 5 biggest publicly traded challengers have an average cost-to-income ratio at 47% that looks a lot like Lloyd's, for example, at 49%. Their costs of funding for all their mobile apps and jazzy stores are not much lower either. Net interest margins at over 3% are not much higher than Lloyd's. This is, however, a matter of size. The publicly traded challengers put together have about 10% of Lloyd's loan volume. As they get bigger, perhaps by combining, cost ratios will drop and the legacy banks will have a real competitive problem on their hands. Marketplace lending is tiny too. The $2.7 billion in marketplace loans outstanding are less than 1% of the UK total, according to AltFi. The product has not existed for even one credit cycle, though. If it makes it through the next downturn respectably, money will pile in. The UK retail banks have a few years to prepare for a new world, but not much more. Rob Armstrong, Lex.